NVIDIA is only a couple points away from breaking out of this major pennant pattern on the daily. The expected move of this breakout would be all the way up to 135 to 140. So that'd be near the current all-time high for NVIDIA. So this is a very critical trend line, this downtrend right here, that I'll be watching very closely this week. Not only that, last week we saw quite a bit of complementing bullish flow for NVIDIA. For example, we had this $2.7 million out the money call order, and they bought 40,220 contracts. That's pretty rare, hence why this is highlighted in blue. It's highly unusual to see an order like this, especially in such a short expiration. So it's possible they, along with all these other whales that we saw near end of day, are expecting this type of large move, and all of that comes down to a breakout above this downtrend. So I'm going to show you here how I am personally going to trade this week, and then I'm going to go right over to QQQ after, because this so far is leading into a very nice upside setup as well. So first off here for NVIDIA, I like to trade based on candle confirmation. So for example, we have the trend line up here. I have it circled already. I'm looking for a breakout roughly above 125 mid, or more specifically, a 125.30. Now, obviously that price is going to change with time, since if we were to, for example, consolidate or maybe pull back early this week, and then maybe Tuesday it attempts to break out, well, that'd be exactly at 125 flat. So it's going to change with time just based on the angle of the downtrend. Regardless, looking for a breakout of this downtrend, ideally on an hourly confirmation close basis. So what does that mean? Essentially, if we go to the hourly chart here, I want to see an hourly candle close decisively above this trend line. That's going to give me the confirmation required to enter the setup. So let's say on Monday, for example, we have a breakout within the first couple hours and we close the hourly candle right here about 125 mid. I'd add a call position, probably the October 18th calls. That's what I'm looking at right now, that OpEx. And I'd add that call position with my risk being a breakdown back under this downtrend on the hourly. That's my personal risk parameter in this case. It's a very tight risk, but that's also kind of what you have to do if you're trading more shorter term options, since that would expire, the October 18th would expire in about 2 to 3 weeks from now. So I need to make sure that I have pretty tight risk, all things considered. So risk could be back down under this trend line. And as long as it stays above, at least in the short term, I'm willing to continue to hold it for that breakout move. It's possible it just continues to break out to the upside, overall strength. It doesn't really want to go back at all. It's also possible that we retest it later. Maybe Tuesday we retest it and it goes around here and then pops back up. But all things considered, as long as we get that hourly confirmation above, I'm willing to hold that position as long as it can stay above. So that's what I'm looking for here. It seems like, again, the flow is supportive of a breakout move coming. So that's always a good confirmation bias signal. But as for the entry, I'm not basing my entry on these prints here. I'm basing it on the technicals. That's what I always do. That's how I can base the best risk reward, is not on options flow. It's on the technicals. This is a great way to scan and to find the best setups in the market, just based on relative interest. In this case here, a lot of relative interest for those calls on NVIDIA. So I'm able to find and develop my own trading thesis, and I can go ahead with it as early as tomorrow of this week. So that's what I first wanted to share in this video. Secondly, QQQ, update on this one because I spoke about it last week. I said as long as we remain above the green box I have here, this demand zone, or what was a demand zone at the time of that recording, I said we could have a lot more upside. Anything below would be chop. That is what we ended up seeing over here, a lot of chop, because we broke down very early on Tuesday. Remember this, October 1st. So Tuesday we broke down below that green box. So a lot of chop afterwards, no specific directional bias at all after this breakdown move. And then we're able to reclaim the green box again. So it's the same exact thing for this week. As long as we can remain above this green box, then we're going to see upside continuation, likely in an aggressive fashion. And if we go back down below, especially between, and I'll show you with both of these lines here, but especially between where this low or relative low was, or higher low that is, over here around 480 and 483.94, we're going to see continued chop like we saw in this previous range. So if you want a directional move like I do, because that's what I want to trade, I'm not trading the sideways chop, I'm not selling premium, I'm looking for a directional move. I want to see us stay above this green box here. And as long as we can do that, we can see that continuation move, kind of like what I'm looking for on NVIDIA if it can break above its downtrend. So these are my two main watches. I have a bullish bias on QQQ still. Again, we are above this green box. So from a technical perspective, that's great. Also, we're above this downtrend from over here last week. There's a couple ways you can draw it. You could draw it from the top, and I'm referencing this top here, this pivot over there, but I prefer to do it on the secondary top over here where it found the second rejection. So that's just a preference, personal preference. It doesn't really change much, all things considered, since we're above it at the moment and we're above this now demand zone, previous supply zone. So I like both of those factors, as well as I like the fact that the VIX is pretty high right now, which may sound weird that I'd say that as a positive, at least a bullish outcome for the market. But because of how heightened we are, as you'd expect ahead of elections, there's a possibility of hedge roll-off as we go into that election season. Because personally, my macro thesis is that the elections are mostly priced in at the moment. A lot of the recent pullbacks we've seen, especially during this vol explosion early August for that August 5th bottom, as well as over here in early September, a lot of this was the market pricing in both potential rate cuts, as well as geopolitical factors and the elections. And I believe a lot of this is front running ahead of that election time period. And that would be the last factor here, because rate cuts are pretty much factored in at this point based on the Fed fund futures. So I actually see this as a positive for the bulls on both S&P 500 as well as QQQ. And I'll show you here kind of my general bias. I have it on the 15-minute chart, but essentially anything over 571.50 on SPY is very bullish. I'd characterize this as being a major breakout level. I had this level before we broke out actually on Friday. And once it broke, finally, you could see here, it just squeezed to the upside. So above 571.50 is amazing. I personally have long exposure still in the market, so I'm looking for some type of upside move in a quick fashion for those contracts. But as long as it stays above here, this will be my stop level. Any breakdown below means more chop, no directional output, not interested in trading that. But as long as it stays above, we can see that continuation. Again, similar to NVIDIA, if it can get above this downtrend. If we get back under and we're kind of in this range again, it's still leaning towards the bullish side, but you're going to see chop kind of like we saw on Friday. Anything back under 569.70 now, and we're looking at a bit more bearish outcome, probably down to the mid 560s at the bare minimum if it were to fall below this week. So this is my bias based on levels. Pretty tight. It's not as often that you get this amount of tight bias because these are the spread between both of these is not even $2 a share. So very uncommon. You can find this tight of a spread, but when you do, it makes for amazing risk reward, especially since I'm on the long side right now. So again, to reiterate, my stop is under a breakdown back under 571.50 on the hourly candle confirmation close. Otherwise, as long as we remain above, I can see a lot more upside past all-time highs. So that isn't that far away at the moment, but I can see like 576 to 578, possibly 580 max next, assuming we can continue to hold above this level, because this daily candle, very bullish. You can see the huge wick over here after a downtrend breakout retest. That's always great to see on the daily. And then also complements the weekly candle very nicely because of this pickup here. So a lot of green on the weekly shows that support was had over here with these wicks as well. It shows there's a lot of demand at lower prices, not really that much lower, but still lower nonetheless. All good signs of upside continuation, plus the fact that we have that excessive hedging ahead of the elections that can start to roll off as those participants get squeezed out. So that's my thesis right now. I am long at the moment, bullish on the market, have the correct risk parameters in place, willing to add other tickers such as NVIDIA if I see my criteria get matched, and that's where I'm at in the market right now. So regardless, as always, appreciate you guys watching this video. I'll see you next time.